Over the past few years, Chinese investors have played a major role in the global economy, investing in various sectors and driving growth in many countries. However, recent events and changing dynamics have caused a decline in their confidence. One of the factors contributing to this loss of confidence is the ongoing trade tensions between China and the United States. The trade war, which began in 2018, has resulted in increased tariffs and restrictions on trade between the two countries. As a result, Chinese investors are becoming more cautious about investing overseas, fearing the potential impact on their business ventures. Additionally, the Chinese government has implemented stricter capital controls, making it more difficult for investors to move money out of the country. These capital controls are aimed at preventing capital flight and stabilizing the Chinese economy. However, they have also limited the flexibility and freedom that investors once had in diversifying their portfolios. Another factor dampening Chinese investor confidence is the slowing growth of the Chinese economy itself. After decades of rapid expansion, China's economic growth has been slowing down in recent years. This slowdown, coupled with the government's efforts to transition to a more sustainable and consumer-driven economy, has raised concerns among investors about the profitability of their investments. In addition to these economic factors, Chinese investors are also facing increased scrutiny and regulatory challenges in foreign markets. Many countries, including the United States, have raised concerns about national security and have tightened regulations on foreign investments, particularly in sensitive sectors such as technology and infrastructure. Furthermore, political tensions and diplomatic disputes between China and certain countries have created an environment of uncertainty for Chinese investors. These tensions can lead to increased regulatory hurdles, trade restrictions, and even the potential for asset seizure. Such risks have led many Chinese investors to reassess their international investment strategies. It is important to note, however, that not all Chinese investors are losing confidence. Some are still actively seeking opportunities abroad, particularly in sectors such as real estate, tourism, and consumer goods. These investors have a long-term outlook and believe in the potential for growth and returns in international markets. Despite the challenges and uncertainties, Chinese investors continue to play a significant role in the global economy. Their investments have contributed to job creation, technological innovation, and economic development in many countries around the world. As the dynamics and circumstances evolve, it remains to be seen how Chinese investors will adapt and navigate the changing landscape. Additionally, China's government is taking steps to address the concerns of its investors. The government has announced various measures to support and encourage outbound investment, such as simplifying approval procedures and providing financial incentives. These efforts aim to boost investor confidence and promote the continued expansion of Chinese capital overseas. In conclusion, Chinese investors are currently facing a loss of confidence due to various factors such as trade tensions, stricter capital controls, slowing economic growth, increased regulatory challenges, political tensions, and diplomatic disputes. However, not all investors are losing confidence, and the Chinese government is implementing measures to address these concerns. The future of Chinese investment in the global economy will depend on how these challenges are managed and whether new opportunities emerge. Looking ahead, the future of Chinese investment remains uncertain. Despite the current challenges and loss of confidence, there are potential catalysts that could reignite Chinese investors' interest in international markets. One potential catalyst is the resolution of trade tensions between China and the United States. If the two countries can reach a mutually beneficial trade agreement, it could alleviate some of the uncertainty and restore confidence in Chinese investors. Additionally, a more stable global trade environment would provide a more conducive landscape for cross-border investments. Another factor that could drive renewed confidence is a rebound in China's economic growth. The Chinese government has implemented various stimulus measures to support the economy, including monetary easing and infrastructure investments. If these measures prove effective and stimulate growth, Chinese investors may regain their optimism and seek opportunities abroad. Moreover, the Chinese government's efforts to liberalize its financial markets and further open its economy could attract more capital outflows. As China continues to promote economic reforms and reduce regulatory barriers, it could create a more favorable environment for Chinese investors to diversify their portfolios and expand their global presence. Additionally, advancements in technology could play a significant role in reshaping Chinese investment patterns. China is a global leader in areas such as e-commerce, mobile payments, and artificial intelligence. As Chinese companies continue to innovate and expand into new markets, it may encourage Chinese investors to seek opportunities in sectors with high growth potential and technological advancements. Furthermore, the ongoing Belt and Road Initiative (BRI) presents a unique opportunity for Chinese investors to participate in infrastructure projects across the globe. As China strengthens its economic ties with countries along the BRI routes, it could stimulate investment flows and open up new markets for Chinese investors. It is worth noting that Chinese investors are not only focused on outbound investments. There is also a growing trend of Chinese investors redirecting their capital back into the domestic market. This shift is driven by the size and growth of China's consumer market, as well as the government's commitment to fostering innovation and entrepreneurship. Chinese technology giants, such as Alibaba and Tencent, have been investing heavily in domestic industries such as e-commerce, fintech, and entertainment. These investments contribute to the overall ecosystem of innovation and provide opportunities for local entrepreneurs and startups. Moreover, the Chinese government's emphasis on self-sufficiency and the development of key industries through initiatives like Made in China 2025 could further drive domestic investments. By promoting technological advancements and reducing reliance on foreign technology, Chinese investors may see increased opportunities within their own borders. Despite the challenges and uncertainties, Chinese investors continue to adapt and exhibit resilience. They have shown a willingness to explore new markets, diversify their portfolios, and take calculated risks. This dynamic approach to investment is a testament to the entrepreneurial spirit and ambition of Chinese investors. As the landscape of global investment continues to evolve, it is essential for Chinese investors to remain proactive and adaptable. By staying informed about market trends, geopolitical developments, and regulatory changes, Chinese investors can position themselves to navigate the changing dynamics and seize opportunities as they arise. It is also crucial for Chinese investors to maintain strong relationships and networks within the investment community. Building connections with local partners, professional advisors, and industry experts can provide valuable insights and support when exploring international markets. Lastly, Chinese investors should continue to prioritize due diligence and risk management in their investment strategies. Conducting thorough research, assessing market conditions, and understanding the potential risks and rewards are essential steps to making informed investment decisions. In conclusion, Chinese investors are currently experiencing a period of reduced confidence due to various factors. However, there are potential catalysts, such as trade resolutions, economic growth, financial market liberalization, technological advancements, the Belt and Road Initiative, and domestic investment opportunities, that could reignite Chinese investors' enthusiasm for international markets. Furthermore, the resilience and adaptability of Chinese investors, coupled with their entrepreneurial spirit, position them well to navigate the challenges and seize opportunities in a changing global investment landscape. By staying informed, maintaining strong networks, conducting due diligence, and managing risks effectively, Chinese investors can play a significant role in shaping the future of international investment. As global dynamics continue to evolve, the actions and decisions of Chinese investors will shape not only their own investment portfolios but also the broader landscape of international finance and economic growth. With the right strategies and opportunities, Chinese investors can regain their confidence and contribute to a prosperous and interconnected global economy.